Welcome to the NN Investment Partners MaxTen, a series of one-on-one interviews with our investment experts in under 10 minutes. My name is Sandra Brouwer and thank you for joining us. Today's guest is Annemieke Coldeweijer, co-lead portfolio manager of the European Sustainable Credit Strategy at NN Investment Partners. In this interview, we will talk about when a holding sufficiently complies with the sustainable portfolio criteria and why sustainable credit investing offers good opportunities in today's investment market. It is time to get Annemieke on board. Welcome, Annemieke, to our MaxTen.
Thank you, Sandra. It's a pleasure to be here.
With an eye on the time, our 10 minutes start now. Annemieke, what makes sustainable credit attractive for investors in today's market?
In my view, investing in sustainable credit offers credit investors the best of both worlds. With that, I mean that it obviously offers a way for investors to make their investment-grade credit portfolios more sustainable. And in addition to that, we believe that by focusing on sustainable businesses, financial performance improves as the ESG profile of a company is an important driver for the credit worthiness and thus valuations of credit investments. In short, investing in sustainable credit creates value for stakeholders from a financial and societal perspective.
Okay, so best of both worlds. And how does the Euro Sustainable Credit Strategy work at NNIP?
Our strategy actively invests in a diversified portfolio of high-quality corporate bonds, issued by companies that have sustainable business models or are in the process of transforming their business model into a sustainable one. The companies we invest in largely contribute to themes such as energy transition, sustainable mobility, sustainable consumption, and the prevention of money laundering. So this means we invest in companies that already have sustainable operations and in those that are actively working to become more sustainable. Finding today's ESG leaders is one thing, but finding those companies that are moving to a more sustainable business model is equally important because it enables us to have the biggest impact on the real world by stimulating change.
You mentioned the importance of a sustainable business model. How do you define a sufficient sustainable business model? And when does a holding qualify to be considered for the investment portfolio?
For us, there are three different ways to define sustainable business models from a financial and societal perspective. A first way is that the company outperforms its peers on sustainable behavior when it comes to material ESG factors. For example, within the energy sector, we see that none of the big players meet the scenarios to keep global warming below 1.5 degrees. However, based on our active dialogue with them and the concrete actions we see, we conclude that a few of them really are moving in the right direction. For us, that's a reason to selectively invest in the few companies that are moving and show intrinsic willingness to change and not just because regulations require them to. A second way is that the company produces sustainable solutions or products. This could range from telecom companies making sure there is internet access in remote areas to industrial gas companies that actively contribute to developments in the hydrogen and healthcare space or produce products or solutions that help other industrial companies reduce their CO2 footprint. A third way is that the company shows sustainable behavior. An example of this is consumer companies that not only look at their own behavior and footprint, but also set the same standards for the companies in their supply chain, all stakeholders and shareholders. They would make sure employees of companies in their supply chain are treated fairly and that those companies make an effort to reduce their footprint as well.
So that makes you quite selective in choosing potential holdings for the investment portfolio. What can you tell us about the financial and the non-financial results?
Yes, we are definitely selective when choosing our holdings. As for financial performance, I have to refer viewers to our fact sheet, but I can say that I'm quite happy with the consistent results we have been able to achieve since inception. Regarding ESG results, we have a specific objective to demonstrate a lower carbon footprint than the benchmark, and on this we are seeing positive results as well. But it is not just environmental results that are in focus. we demonstrate a range of social and governance indicators that are integrated into our investment thinking, such as board diversity and independence and employee safety. These metrics, among others, serve as proof points of the high-quality composition of the portfolio from an ESG perspective.
That sounds promising. Looking at the AUM, the strategy has grown a lot over the last few years. Do you know what motivates clients to invest in your strategy?
We have a wide variety of clients, ranging from pension funds and insurers to wealth managers and central banks. But they are all looking for the way to make their traditional credit portfolio more sustainable. For most clients, it is no longer a nice to have, but more and more a need to have. They realize that they can contribute to positive changes in the real world without having to compromise on performance. Our clients appreciate the active approach we have to both sustainability and credit analysis, and how we combine that with high-quality data. We use a lot of data, but in the end, the external data is just an input in our analysis. And ultimately, we make our own call on the credit and ESG profile of the company. The bottom-up qualitative analysis of both credit fundamentals and the ESG profile, combined with our active dialogue with companies we invest in, really gives us the opportunity to create a clear picture of where a company stands and what motivates a company.
As a final question, looking forward, what can investors expect to see in the sustainable credit markets in the coming years and even beyond?
The expectations that come to mind is that investment opportunities will increase, data availability and transparency will develop significantly, ESG risks are here to stay and even become increasingly important, and financial and non-financial performance is becoming equally important. Regarding the first point, with the pressure from society and the increasing need for action, I expect we will see more companies investing in sustainable solutions and actively contributing to environmental and social goals to speed up transition, which will increase investment opportunities for us. Concerning data availability, sustainability becomes a need to have, and data and transparency are crucial. You already see increasing pressures from all across our society, but also from regulators. Clients want to know what happens with their money, whether that is their pension money or their insurance premium, so companies will need to be more transparent in their ambitions and what they actually do. Hence, I expect data availability and transparency will increase significantly. My third expectation is that ESG risks are here to stay and are even becoming increasingly important. Not just for the usual suspects like the energy and utilities sector, but also for many industrial companies and financial institutions, for example. They need to take ESG risk into account if they are to survive or flourish. For instance, we've all seen activist shareholders who are challenging oil and gas giants to speed up their transitions. And finally, from a client perspective, we see that financial and non-financial performance is becoming equally important for them and their stakeholders. Although this development has not yet been equally adopted throughout the world, it is a remarkable contrast with what we saw 10 years ago.
Okay, so 4 key expectations for investors to be aware of. Annemieke, we absolutely look forward to seeing those developments accelerating further. And now it is time to wrap up for today, because our 10 minutes stop now. I would like to thank you, Annemieke, for your time and this insightful Q&A.
Thank you, Sandra. It's been a pleasure to be here.
And of course, on behalf of Annemieke and myself, thank you for watching. I hope you enjoyed this interview and we look forward to seeing you again at the next NN Investment Partners MaxTen. Stay tuned.